information.
Let's start with a really simple but powerful idea. To understand a huge mistake that so many people make in the financial markets, we actually need to talk about cricket for a second. Yeah, cricket. Specifically, what happens when you're completely outmatched and you don't even know it.
Just picture it. You're standing there, and Jasprit Bumrah is about to bowl a 150 km/h scorcher. And what's in your hands? A plastic toy bat. It's not just a mismatch, right? It's a complete disaster waiting to happen. Well, what if I told you that this exact same scenario plays out every single day? Not on a cricket pitch, but in the stock market. And there it is. The cricket pitch is the derivatives market, and that plastic bat, well, that's the set of tools most retail traders are bringing to the fight. Every single day, thousands of people are stepping up to the plate, totally unprepared for the professional level game they've just walked into. So let's call this exactly what it is: the plastic bat problem. It's this whole issue of being fundamentally under-equipped, totally outmatched. Basically, you're set up to lose the game before you've even made your first move.
Welcome to The Explainer. Today, we're going to peel back the curtain on the financial markets. We're moving way beyond just looking at red and green candles to understand what the big institutions are actually up to.
You know, most traders, they pull up a standard price chart and think, okay, this is it. This is all the information I need. But what if I told you those familiar patterns, those candles you've been staring at, are only showing you half the picture? And maybe, just maybe, they're leaving out the most important part.
Get this, it takes your brain up to half a second just to see a price change on the screen and decide what to do. In the time it takes you to blink, trading algorithms have already placed and executed thousands of orders. So by the time you see a big move happening, the smart money is already in position. This isn't just a small speed advantage, it means you're fundamentally playing a different and much slower game.
So here's what we're going to cover in this explainer. First, we'll talk about why just looking at candles can be misleading. Then, we'll uncover the invisible market where the real game is played. After that, we'll look at the tools you need to see what's happening there. We'll walk through a real-world example, and finally, we'll wrap it all up with a whole new way of looking at the market, shifting from just reacting to actually reading it.
All right, let's jump right into part one and break down why the way most people trade is, well, kind of set up for failure from the start.
The source material kicks off with a pretty brutal statistic. A staggering 96% of traders don't make money. And it's not because they aren't intelligent people. It's because they're focused on the wrong thing. They're chasing the effects, the candles, instead of understanding the cause.
And this right here is the core of the issue. A big green candle just tells you the outcome of a battle. It doesn't show you the battle itself. Relying only on price is like trying to understand a football game by only looking at the scoreboard at the end. You see who won, sure, but you have no idea.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? Great. So today's session is on this NTM VolX chart, which is a very clean tool which we have at Vtrender Charts, which tells us which of the supply or demand is in dominant force. And accordingly, we need to look at that direction for the day. And for the time it is showing us that which of the supply or demand is greater. So on screen right now, we have the NTM VolX of Nifty of today. You can see it's starting at 9:15, and you can see there's one blue line and there's one purple line. The pink line is the supply, the blue line is the demand. So the blue line above the pink line tells us that the demand is greater than the supply. So how do we make use of the volumex, and what are the parameters we need to look for, and when does it gives us a directional move, and when does it tells us that you need to be patient, you need to wait? So let us discuss about the features of volumex, and then we'll move on to the latest volumex chart and compare it with the that particular index, because we have volumex for all the four index: Nifty, Bank Nifty, FinNifty, and MidCap. And we will see what we have done in all these index and what the volumex was showing us today, because taking the latest example is the best, and because we had contrasting signals in the three indices. Nifty was different, Bank Nifty was different, MidCap was completely different. So we will identify that on the market profile chart, and also see how the volumex also gave us that clear signal of when the setup was changing. So what do we do in volumex? We have these, of course, we have the candles of the spot chart, which you can see, which tells you what the spot price is doing. Then we have these two lines. So what we need to identify is how much the two lines are getting diverged. If they are close to each other, then that is telling us that is a range bound market and not much is happening. No one player is dominant. But the time they start to diverge, and we have spoken about how we look at that 45-degree rule, and you need to see how that when that happens. So the start of that 45-degree move, whenever it happens, is telling you that the one force is going away, moving away from the other force. So if it is the blue above the purple, then it means the demand is getting dominant over the supply. So we need to look out for those kind of swipes in the volumex chart, and those which, when they happen, the exact time will also give you a good signal in the order flow. We will come to that later when we do both volumex along with order flow. But today's session is mainly how to use the volumex and what are the features we need to look out for in the volumex chart. So I'll just quickly take it back to 18th of November, because today's was a very clean move. We need to see charts of different days. So you can see how this was 18th was the settlement day, and you can see how at the open, from the open into the initial balance, how the blue and the purple were just interlinked with each other. So this is telling us that nothing is happening, and this was a sign that the writers were coming into play. It was more a case of writers being invited, being attracted to the auction. And then what we saw the put line going about this. I'll just zoom it a bit more. So we'll not focus on the spot. I'll take off the candlestick so that we can just see the volumex chart. So this, on the 18th, this part where the put is swiping higher, you can check this out, that how it is playing, giving us that 45-degree rule. And this was around the B period. So this tells us that now this is where the supply is getting more dominant than the demand. And this is where you can look for opportunities in the put side, long puts. So why we are revisiting this day was not one way move. We got moves in both directions, and this kept changing. So this is a day where you need to be very careful. This tool becomes all the more important because this keeps you in sync with what the supply and demand are doing. So till the time this put was rising, you were looking for longs in puts. And then what happened in the afternoon, we saw this interlinking. So this, when this crossovers again during the day, this is telling us that something is changing in the auction. So here you will stop looking. You can see how this put volumex stopped making higher peaks. The move continuing in one direction will be clear when the volumex chart lines are making higher highs, and the other volumex is either uh, straight or falling. So if they continue to diverge, the distance between these two were increasing till this point, till this point. So till here, you were good for looking on the long sides in puts. But then what happened? There was a change of character. This is a very important juncture. When you see this crossover happening in the volume X, it is telling you that now it is no longer that the seller is dominant. Now there is a fight between the buyer and the seller. So you can see what happened. You saw one more attempt by the sellers to go back, but then again they failed. And here, this was very clear that they are diverging again. You can see the put volume X is dropping and the call is going higher. So this signal, this part of the day, which is around the F period, 11:15 to 11:45, sorry, E period, was telling you that the now the demand is getting above the supply. So that is what this volume X tells us, keeps us in sync with the latest auction. And then you can see how again in the afternoon after the G period, we saw a small crossover again, but then again the call side again went higher. So this will tell you which of the supply or the demand is higher. And if I take you to the, it was the settlement, so we can expect a lot of swipes happening on that day in options, and that is the reason you see this afternoon post the K period, we saw the put going higher and then a swipe in the puts. So this is telling us now no longer the demand is. So what is this telling us? Some put writers have got hit into the close on the settlement day. So you can see how the call stopped rising and we got the crossover here, and then this remained stable, but this went higher. And these were swipes. This is more expected on expiry day, on settlement days, because you have lot of writers, laggard writers who come in, they get stuck and they are forced out. But what this volume X chart is telling us on the settlement day, but there was no clear one side move. So if you are looking for directional trades, swing trades, this volume X is definitely giving you that sign that this is not a day to take directional trades, because you've got multiple crossovers of the put and call. You have seen how the put was dominant at the open, and then the call took over, then the call again took over in the afternoon, but then into the close, the buyers were not able to maintain a good job. So this is about the 18th. So now let us move on to the 19th. And that is yesterday, and see what the volume X was showing us yesterday. And it is very important when you're watching the volume X chart, it is very important to have this I volume X setting on, because this will show you only the current day's data, which is what we are interested in, because the supply and demand keeps changing every day. So we want to know right from the open which of the supply or demand is dominant. So because we are doing this session and I'm going through the last 3 sessions, I don't have this on, but if you switch this on, you will have the volume X only of the latest day. So once I do complete the review of 19th, we will again switch on that setting where we get the volume X only of today. And why is it important? Because we saw on 18th, it was settlement day. So that series got over. So you can see how on 18th, the ratio, if you see the ratio, you can see how the ratio was huge. The ratio into the close, which is there in the call volume X and put volume X box, info box right at the top corner, top left corner, this one. You can see how this will change when I take the cursor near there. So into the close, it had almost gone to 3,800 on the put volume X and 1,967. So this is because the volumes were so huge, and that is expected on settlement day, because we have the highest turnover and highest volumes recorded on settlement days. So that is but expected. So once this is done, on the next day at open, if you don't change the setting, you will get these kind of sleeping lines. So that does not mean that the supply and demand is not there or the volumes are not there. Why this happens is because now a new weekly cycle is started. That is the reason it starts from scratch. So that is why it is very important to have that intraday setting, this I volume X, which you have on the bottom left on, or what you can do, you just shift the panel which will show you only that current day's data. So you can see how I just when switch it to the start of the day, how that it is no longer sleeping line. You can see how both were in intermingling in the first part of the day, and then after the initial balance you can see the call is clearly taken a diversion, and this is that 45-degree rule, 45-degree angle which we look for in the volume X chart. So when this happens, when the put is not rising or stable and the call is going up on a 45-degree angle, you know that now it is the buyer who is dominating. Yes, we did come back closer to each other in the F period, but then again this divergence started in the G. So you can see how, and these kind of swipes, you can see how clearly you have a swipe over here, and this swipe is telling you when the initiative player may have entered, because that is the time where it is clearly swiped. So this moment, when you revisit the order flow chart of the instrument you are trading in, will definitely give you a good reference, maybe the low of that bar or the POC of the bar before it. And if you get an IB3, you nothing like it. So these swipes are very important, and also important are that it holds on to this low and it continues to make higher high. So that is telling you that the buyers continue to control. And you can see how we got this swipe higher into the close. That is the reason we closed at, we made new highs yesterday in the K period. And that is what was being confirmed. The put volume X you can see was almost a straight line, but the call volume X kept rising and kept getting these swipes. So these swipes, when you get, these become important entry points for a new imbalance which has started in the call side. So this is how yesterday's chart played out. It was very clear after the first 45 minutes where there was too much of intertingling, and this is very clearly telling you that you need to wait, you need to sit out. So volume X is not only telling us when you need to take a trade, what trade you need to look for, it is also telling us when we need to be patient and sit out. So this was about yesterday, where it was very clear that the call volume X was the more dominant one. So let us now come back to today's chart. And for today's chart, what I'll do is I'll have this I volume X setting off. So it is only going to show us today's volume X. So you can see how we don't have any volume X for the previous session. It is only going to show us today's. So this, you can see what happened at the open today. We opened higher. It was a higher open. Which kind of got rejected because we did not get back above the opening highs and we probe lower. But you can see not at any point of time the the supply side got above the demand side. So even in spite of this dip which we got in the B period, we did not see the supply getting above the demand. Yes, we did get this swipe. It did get closer, but that crossover did not happen. Until the time the crossover is not happening, you're going to stay in the direction of the volume X line, which is above the which is the upper one. So what happened then was we got some swipes. If I just and this is based on live data. This is on tick data. These are live charts which get updated as and when the volumes are coming in. So it is all the more important for us to be ready and be in sync with what this shows. So you can see how in spite of making this red candle, there was no drop in this volume. In fact, this call volume X was continued to rise and it gave us a swipe over here. And this time around the B period was one such swipe where you could have checked the order flow of the call and see if it is giving you a IB signal or a long side opportunity. And then what happened next? We are seeing a swipe here, which I showed just before the IB. Then we see one swipe in the C period. So these are swipes which we talk about. This swipe, if you compare this with the order flow of the call, you will definitely get a good signal over there. And the lows of that bar, whether you're watching the 3-minute bar, 3 minute is ideal for taking entries. You know, the longer time frame is on the upside because we were above the rollover point today for the first time in the November series. So it was very clear that the bias on the upside, and the volume X was also clearly telling us that the call volume X is going higher, and the put volume X was running parallel to it in the initial balance, so it was not kind of diverging. But here, after the initial balance got over, you can see this part was clearly telling now the calls have started to rise and the put is kind of getting stagnated, and this continued to happen. They were stepping up and the put was not rising in sync with how the calls were rising. Yes, it was not a straight line, but this line was little bit slower. So you can see the distance between the two was continuing to increase, and these swipes which you get, these are fresh opportunities to look for long side trades. So this is what happened in entire day. We were seeing this call volume is giving us multiple swipes on the upside. So as long as you are getting these swipes on the upside, it is telling you that the calls are in play. And I'll just take you to, yeah. And one more thing which I already mentioned before, it needs to keep making higher highs. So if that is happening, you know that the trend is intact. But once it stops making higher highs, you can see how in the K period was where it made the high, and this distance between the call and the put was maximum in the K period. This, so here you can see how the things changed after the K. The call volume started to give you these zigzag move. It was no longer a clear trend line up which we are seeing from morning, but it was more of a fluctuating heartbeat, what you get in a hospital, that kind of a signal. And the put volume X started to rise slowly. So this was telling you profit booking, yes, and no new buying was happening after the K period because we never were able to take off these highs. So this is what it was for today. It was very clear it was an easy day because the call volume X completely remained above the put volume X today. So it was we only needed to look at one direction, and whenever the opportunity was presented, we had to take that setup, book part, and trail rest to cost. So that was the template for today. So this is only for the Nifty which we have seen. So same thing we can follow for all of them. So we have seen the swipes. What I'll do now is I'll just shift to a 2-window mode and we'll compare the market profile chart with the volume X chart. And because of the screen space, what I'm doing is I am switching this volume X to the 3-minute so that we can see the entire day's volume X along with the Nifty. So here you can see how the initial balance B was completely inside A, and that is the reason we saw the open in the initial balance. They were running parallel to each other. The call volume X and put volume X were running parallel to each other. And once we made this C side, this is where you get that swipe higher. And that is where it starts to diverge, the 45-degree rule. And you can see how from this point of time, we continue to rise higher. And then after the K period, which we already made out, you can see how there was a sharp swipe in the call volume X, and that is where the put volume X also is showing you that it is beginning to rise. So this was telling us this is not a short trade, but this is definitely telling you no fresh demand is coming in, and the POC shifting to the top is telling you profit booking. The buyers who were causing this move higher were booking profits. So very clearly you see the structure on the left, and you see when the supply and the demand is getting imbalanced and you want to get into the trade. So when we saw this is diverging, as per this structure, we were looking for the 2IB target, which got hit today in Nifty futures. So this is as far as the Nifty is concerned. We have this volume X for all these index. So I'll quickly move on to the Bank Nifty, and you can see how Bank Nifty showed us a different move, because Bank Nifty was not in sync with Nifty for a change today. In fact, Bank Nifty had left this selling tail at the open, and we made a seaside, a typical seaside which got rejected. Very low volumes we had in the initial balance, and the seaside also came on very low volumes. That was telling us that there is no supply being added, and it is just uh, making a test of the range. And you can see how this was parallel to each other till the initial balance got over. Even in the seaside, when we made new lows, there was no point where the supply got above the demand. So it is telling us that this is just a low volume balance which is happening. And here, as soon as the the seaside got over, you can see this swipe higher. And from here, this started to diverge a bit, but still the put was still running in parallel. And where did the main thing come? It came here. And it is not a surprise, this came in the G period. And you can see this is where the 45-degree rule played out. The put was almost same, and the call just shot up. And you can see how in the market profile chart we got a range extension handle in exactly the G period. So it is keeping you in sync with the structure. It is telling you when you need to enter. In Nifty, we saw as soon as the initial balance got over, we had to go long. In Bank Nifty, it took more time. It did not show us supply adding in the seaside extension. So that was telling us that the sellers are not doing a good job. And it gave us this swipe higher when the G period made the new highs, made the range extension. Same thing after K period, it began to stall. It stopped making higher highs, the CE volume X. So that is why you have these two HVNs at the top, which was showing us profit booking. So this is the Bank Nifty for you. You can see very clearly how Bank Nifty was different today, and even the volume X was clearly telling us when it changed the character. The seaside not showing supply above demand was telling us no fresh seller is adding in, and the G period when we got the range extension, we got this swipe. So this was where you get into long side trades in the Bank Nifty calls. So this was about the Bank Nifty. Now let us move on to the MidCap, which was another completely different animal today. So same thing, you have the volume X on the right and the market profile on the left. So MidCap did not do anything. After the higher open, you can see you have an A period tail at the top and a one at the bottom. So we remained in this A period for most part of the day. The E period did make new lows, but it held this buying tail. So what you see in the volume X is nothing. Both have been parallel. You see a swipe here, you see a swipe in the put also. So there is no 45 angle which you are getting. So this continued. You can see this is a carbon copy. Both have been carbon copies. Like when we got this swipe, the put had to remain same, but this did not happen. The put also continued to rise. So you see this rise here, you see the rise here. So at no point of time they were kind of diverging. It was always being parallel to each other. And when what happened is, we always tell you C and J are something where you need to be extra careful. We made new highs in the J and it got rejected. And what did it do? For the first time in the day, you see the put volume X going above the call volume X and with a swipe. And this was telling you that the auction is changing character. And you can see how once the KTPO broke below the J, we went on to make a neutral extreme profile to the downside with a failed auction at the top, and the volume X chart also gave us the confirmation of the same. So this is how you can relate to the structure and the supply demand mismatch using, and you can see how the three indices which we have covered, all of them had different character today. Nifty got bullish just after the initial balance. Bank Nifty got bullish only after in the G period, and Nifty midcap never got going because on the upside, because we never saw them diverging. And finally, when we saw the buyer failing, we got this swipe in the put volume X, and we ended up forming a neutral extreme profile to the downside, where we swipe lower, tested this VWAP of previous session. So this is as far as the midcap is concerned. A final look at the FinNifty. FinNifty is a kind of a subset of Bank Nifty, so it will be similar to what the Bank Nifty is done. Only one change in FinNifty was that it did not make any seaside, and you can see FinNifty was clearly, call volume X was above the put volume X throughout, but the divergence came only after the FTPO got over. Same thing, you can see how the G gave us this extension handle, and this. So what we see on the market profile chart is the 30-minute structure, but what we see in the volume X is the tick by tick data. This will change when the volumes come in. So this is the quickest you will be able to decipher about when the auction is changing character. And if you are able to do that, you will no longer be a laggard. You will be one of the early entrants into the imbalance. And if you get an entry into this imbalance, you can have a good ride. So what we need to do, we need to identify these entry points. We need to get in sync with that, take a trade using that setup, and book part and trail rest to cost. If the trend is going to continue as it showed in FinNifty today, you can just hold on to part of your position with stop loss at cost, and you can maybe book when you get a sign that profit booking is coming in. So this is how we use the VolumeX and the market profile together in the two window mode. We have other tools which you can make, you can have in the two window mode and make use of it, but today's session specifically is for the VolumeX. So be very clear how you need to use the VolumeX. Blue rises above the purple, demand is going up. Purple climbs above the blue, supply is taking charge. So when these two simple rules, and when you get that 45 degrees deviation between the two, you know that you just need to load up, and that will help to load your wallet also. And if there is too much of crisscross happening and both are parallel to each other, you know that is the time to sit out, be patient, and wait for the opportunity to come up. So that is it for today, guys. In case there are any queries, I'll be happy to answer them before we wind up. So you also have my WhatsApp number in case anyone wants to ping about any queries they have about the sessions which we cover. Do feel free to WhatsApp me. I'll be happy to get back to you and do my best to answer your queries. And one more update we wanted to make is we have done away with the plans we had in charts. We only have two simple plans right now, and we have a very basic thing, which is the free plan, which we are continuing, which will not have live data, and we have just one elite plan now for the charts, which will have the live tick by tick data by the NSE. So there is no delayed data in any of the plans now. So any plan you go for will have the live data, and data is the king, information is the king now, and the latest information you need to be aware about at the earliest, which is why these tools are there, and these tools give you that early entry into the trades. So thank you guys for joining in. I'll repeat, the WhatsApp number for support is also there, and my WhatsApp is also there. If you have any queries about the chart subscription, you can WhatsApp on the number which is given now. And if you have any queries about the setups and about the sessions which we cover, you can WhatsApp me on 90362 79747. HVN is a high volume node. So it is a level where you have lot of volumes attached. It is similar to the POC, but the difference between the POC and the HUN is POC will have the highest volumes of the day. Yes, we do plan to have sessions in Hindi also from the next week onwards. The sessions which we have in on Thursdays will be both in English and Hindi. So we do have got lot of requests for the sessions in Hindi. So from next week onwards, we'll make sure that we explain these setups both in English as well as in Hindi. So thank you guys. Thank you guys. Have a great evening, and let's see if we are able to take off the all-time high in Nifty tomorrow, being a Friday. 26277 will be the level to watch, and let's see what the tools in the charts have this.